Hi, and welcome again to another edition of Market Analysis for today, June 27th of 2025. I'm Gio Benacourt, and this is a recording done by Vantage Markets for about an hour and a half prior to the U.S. session open. So today we're having some interesting news coming out from tariffs. China and the U.S. made a trade agreement in London, so we'll have the details on that. Basically, it was the same that about a month ago. What we spoke about. So that's positive for the market. Then we're going to be having the PCE numbers coming out at 8:30 in an hour and a half. Actually, half an hour away from now. So that reading is the consensus is to come out 2.3% to 2.6% year over year, and month over month 0.1%. So I think the market is already pricing that in as we see the Nasdaq rallying. Besides, all of the indices are rallying. So using our trend-based fib extension tool, let's measure yesterday's movement and see just how far of this move that we've seen here today can we expect the market to continue, reaching. So let's extend our chart, and we use our Fibonacci extension numbers to obviously come in and select a level. So 22,795 is our first level where the market seems to show us, obviously the tool seems to show us where we possibly will come in and find that first level of resistance, or obviously the extension. And then let's just use the golden ratio, 0.618%. So that'll be 22,877. So there you go. But my taking will be psychological values, 22,840. Will the market obviously come in and expect and just continue to move this? Obviously, FOMO is going to come into effect, so we don't need this line anymore. That was a previous all-time high that it's being broken and all that. So now, in regards to retracement, let's just use the tool again and choose basically from the low, yesterday's low, and let's just do today's high. And then will the market come back towards those levels of retracement at the 38%? So that's 22,653. 22,653. 22,653 as our first level of support. And then the golden ratio, 22,570. 22,570. That'll be our second level of support. Fibonacci golden ratio. So let's see if that will be the case today for the Nasdaq. There we go. We have our levels on a daily time frame. You could, depending on the time frame that you up. Now since we're doing day trading, that's why I use daily candlesticks. We could break that down. Obviously, you could go to lower time frames, an hour, 30 minutes, and then take your trades in a 5-minute chart. It's up to you. Now let's do the same for the S&P. So moving, taking from yesterday's low, today's high, today's low, and then we'll select the 0.382 extension tool. So that'll be 6,223. That's our first level of resistance. And then our second one will be the golden ratio, 6,242. There we have it. So there our possible probable levels of resistance, and then let's use the fib, yesterday's high, maybe yesterday's low to today's high, and how much of that will be retracing, and that's where we're going to be using our levels of support. So the 38.20 or the 0.382%, 61.89, first level of support, second level of support, golden ratio, which is at 61.70, 61.70. So there we go. We just basically right above the all-time high for the S&P. All right, so let's eliminate that. There we go. We have our levels of resistance support using our fib section tool. Then we have the Dow. So the Dow, again, the all-time high is pretty high. So it's at 45 and change. So now we could still use obviously the trend-based fib. Yesterday's low, today's high, today's low. So let's use the 0.38%, 43,978, 43,978. The second level, the golden ratio, 44,124, 44,124. And then we have our levels of resistance using our tool, Fibonacci, yesterday's low to today's high, retracement using, again, we could use other values. I'm using what mostly works, the golden ratio, because that's the whole essence of the Fibonacci, 43,506. Everything comes towards that number. So that we have our levels. Now let's take a look at crude oil. So crude oil, again, it's been just ranging. Again, continue to do. It did open gap up today. It did open with a tiny gap up. Hasn't been closed. 66 continues to be a psychological level of resistance. So therefore, I'm going to hold that. I'm actually going to bring down my second level to 67, and 66 can still be sustained. The 50 moving average is still around 64, or getting closer to 64. So again, we could probably perhaps do another, attempt at closing above 66, but again, the pivot point 65. So sideways trading, choppiness here. I'm gonna actually bring up my second level to 62.5. Then we have Nat Gas. So Nat Gas finally rebounding, closing, looking to recuperate. Yesterday it did fluctuate below both of our levels of support. They were violated, they were broken. We didn't close. Actually, it retraced hardly above the 50-day moving average, and that momentum we've seen it today, even though it ended up opening with a gap down. So I'm gonna actually use the 20-day moving average within the Bollinger Bands, and then 360 is still psychological level. So even though it did rebound, it did penetrated today's level of support, I'm gonna leave the same levels here, and just speculating that we'll have a green day for Nat Gas. Profit taking could be in effects. So gold, the safe haven asset is being undermined for now. So we have finally uh, traded below the 3,300 psychological value, and we are below our lower boundary band. So we are implying that we are in a 3 standard deviation in volatility. So therefore, we need to obviously update our levels of support. So 3260 is going to be our first level. 3260, come on. There you go. And our second level, 3240. I'm using actually 3250 because the 50 value also just jumps at me. I mean, it's been because of past experience. History repeats itself as one of the tenets of technical analysis. And the 20-day moving average will be the second level of resistance for gold. So with this news of tariffs and obviously peace breaking out in Middle East for now, gold obviously is being people are also just taking profit. It is also the weekend. It is the end of the month, so that's also another reason to sell it. So there's are different reasons for to come in and sell the metals indeed. So silver also is basically, so we're going to be using the 20-day moving average as a first level of resistance, dynamic level of resistance actually. And then I'm going to use the lower Bollinger Band and then 3.5. Let's see. So I'm going to leave the same level of resistance to support 35.5 and 34.64 for support for silver. Copper. So copper is finally done its momentum to the upside. It's profit taking again. Is a weekend, end of the month. So I'm gonna leave the same levels of resistance that we have here, bringing up my levels of support 495, and then basically this area of 490, which in the past has shown to be first a level of resistance and then level of support. So again, taking money off the table, profit taking. So Bitcoin, I'm not a big Bitcoin trader just because I guess because of my Gen Z generation. I do understand about it. I see the importance of it, and basically today we do use it, digital money anyhow. So cash is king is soon to be fading, but obviously it's going to be around. So anyhow, Bitcoin is yesterday had basically a reversal doji. This candlestick identifies a reversal. So let's see how much more of that will we see today. Will we come out and test the 50-day moving average, which is my first level of support, or it'll penetrate and continue to trade lower? Profit taking also on the table. Then we have the euro. It's 117. Let's see if it will sustain itself above 117. I'm going to use 116 and a half, and then 116 psychological value. So looking for another leg up. Let's see. I mean, if the dollar, depending on the PCE number comes out, will that give some support for the dollar? The pound also looking to sustain itself north of 137. So I'm basically going to use that tight level of support. And should it break that, then obviously we're going to come down and test yesterday's swing low. But let's see what the dollar index is doing, because if it's just well, it did up and gap up. It has been closed, so 97 is going to be the pivot point. So let's see. Let's bring down our level of resistance to right around here, 97 and a quarter. 96 and a half is going to steal the same level of support. So let's see if the PCE will come in and bring momentum to the upside, which basically that's what this gap up is indicating me. I could be wrong, but I think this is being factored in that we'll have a positive reading, and perhaps the dollar index will recover and do a push to the upside, and that will put more pressure on the metals and definitely on the currencies. That's it for me today. Have a great weekend, and I'll see you Monday.